All right. Why don't we just start, and we can fill everyone in if they miss anything. So thanks everybody for spending the time today. Really interesting topic. We have Michelle. How can I pronounce your name? Sorowick joining us from Market Forces to give us an update on ways that we can use our money as a force for good. As part of the Sustainable Us event series, we're just trying to help bring these sorts of bits of information to the community and our residents. It's not something that we've done before, so we had some technical issues with the webinar, but so we appreciate your patience with that. And yeah, here's for a good next hour of listening to what Michelle has to say. Just so everyone's aware, we will be recording this webinar just so that we can utilize that and inform everyone that can't make it tonight. And yeah, I think the next slide just a statement. So council supports Michelle. However, this is her content primarily, and then probably the next slide is a bit of an acknowledgement of country. So Wingecarribee Shire Council acknowledges the Gunnegarra and Wharewa people as the traditional custodians of this land that we're now meeting on today. And we pay our respects to their elders, both past, present, and emerging. Michelle, take us away.
Thanks so much for having me. I also will take a moment to acknowledge country. I'm coming to you today from Ghana country, and I would like to acknowledge the traditional custodians of the land as well and pay my respects to elders past, present, and emerging. So thank you very much for joining me today for this presentation on how you can use your money as a force for good. My name is Michelle Sorowick. I am a campaigner at Market Forces. I work on the coal finance side of things. So I support our bank's work. I support the Stop Dotty campaign and a campaign focusing on Australian coal miners as well. I'm originally from the States, but I have been here for almost a decade now. Now, another disclaimer. The information in this presentation is of a general nature only and should not be considered financial advice. Market Forces does not have a financial services license. If you are seeking a financial advisor who specializes in taking ethical considerations into account, I would suggest the Ethical Advisors Co-op. You can give them a Google. Now, what is Market Forces? We are an environmental campaigning organization and an affiliate member of Friends of the Earth. Our vision is that the institutions charged with managing our money should use it to protect and enhance the environment, not destroy it. And our aim is to provide information and assistance so that members of the public like yourselves can use your power to become a part of our campaigns or run their own. So today I'll be taking you through the reasoning behind our campaign work, look at our main strategy, divestment, and then I'll also get into a few more specifics about how financial institutions specifically support fossil fuel companies. And I will, of course, give you ways to get involved throughout the presentation. Another note on resources, I have shared the slide deck with Council. The hyperlinks should work as a PDF. So you're also welcome to share the slide deck.
Great, thank you. We'll share it after. We'll send it to everyone via the Eventbrite.
Great. So runaway climate change. I'm sure many of you have seen a graph like this before. This is CO2 emissions since 1800. There are lots of other steep looking lines like this relating to plastics in our ocean, etc. I'm not here to talk about the risks that climate change poses or really the science so much. I'm assuming that you're kind of all on board with that. If you need more information about that, I would suggest looking at the Climate Council. They do really great work. But, in tackling runaway climate change, there are a variety of different ways that, you can focus on, I think, and everyone at Market Forces thinks, like the most pressing issue humanity has ever faced. And at Market Forces, we focus on fossil fuel companies. To explain why, I'll briefly touch on the Paris Agreement. Again, something I'm sure you're all familiar with to some degree. It has been adopted by 196 countries. Most importantly, many major corporations, especially in the banking and finance sector, have also explicitly endorsed the agreement. Now, to achieve the temperature goals of the Paris Agreement, which is limiting warming to 1.5 degrees Celsius globally, as pictured here, then we need steep emissions cuts right now and as quickly as possible. The longer we wait to cut emissions, then the sharper the decline needed later. And that sharp decline has real world implications for people who, let's say, work in the fossil fuel industry as, workers in mines or oil and gas. To cut emissions quickly, we need to phase out the most significant sources of those emissions, which is the mining and burning of fossil fuels. Coal, oil, and gas remain the most significant drivers of global warming. I acknowledge this graph is from the 2014 IPCC report, but they've never put out an updated one in subsequent reporting. And this one is just so clear about how much fossil fuels are a part of the problem. Now, according to the 2021 Production Gap Report, to meet the goals of the Paris Agreement, between 2020 and 2030, coal, oil, and gas production must decline annually by 11%, 4%, and 3%, respectively, to be consistent with 1.5 degrees Celsius. Production Gap is a collaboration between research and academic institutions, and incorporates input from the United Nations Environmental Program. So this is what the scientists, that are sort of more unbiased, you could say, are saying. Less politically motivated, we could say. Now, the IEA, very importantly, has also recently come out with similar deadlines for fossil fuel phase out. And this is really significant because the IEA, the International Energy Agency, is something that was basically started in the 1970s due to the oil crisis, and has historically been aligned with oil and gas interests. The IEA produced scenarios that fossil fuel companies use widely, and other energy producers, to try and forecast demand for their product. So the fact that the IEA put out this report and this roadmap to reach net zero emissions by 2050 is a big deal, because the conclusions that it reaches are stark in its roadmap. No new coal mines or expansions of existing mines are needed. No new oil and gas fields. They're a little bit more equivocal about LNG, not needed are many of the LNG liquefaction facilities currently under construction, and a phase out of unabated coal-fired power in advanced economies by 2035 and 2040 globally. And just to be clear, net zero emissions by 2050 is not the same as reaching the Paris Climate Agreement goal of 1.5 degrees Celsius warming. So we should be shooting for net zero emissions sooner. Now, despite global commitments to the Paris Agreement, there are still companies around the world that are actively expanding the fossil fuel industry. We've released many reports over the years looking at these companies. Most recently, our Climate Records Index looks at the top publicly listed coal, oil, and gas producers and infrastructure builders in the world with the biggest plans to expand the scale of the fossil fuel sector. Now, some of the homegrown companies we have determined to be the biggest climate wreckers are Woodside, who you might be familiar with because of their Scarborough offshore gas project, Santos, who plan to frack the Pilliga State Forest in New South Wales, New Hope Group, which are responsible for the New Auckland stage 3 coal mine in Queensland, and Whitehaven Coal, who have a long history of trashing the environment and local communities for their coal projects. Now, since most fossil fuel companies are doing their best to ignore the Paris Agreement and net zero emissions by 2050, they don't intend to wind up their operations anytime soon. Our main targets are often the companies that are not captured in those reports. Instead, they are the financial institutions that enable these polluting companies to operate. And of the many requirements a fossil fuel company has, there are 3 key things it needs from financial institutions that we focus on. So debt, which comes from banks, basically, but sometimes also other investors, and that can come in the form of loans and bonds and lots of other financial products, really. Investors, which can be individual shareholders or asset managers. Our superannuation fund are investors. Insurance for health and safety, property damage, public liability, etc. Those are our main targets. And of course, they are not the only institutions that fossil fuel companies need support from. The government, academic institutions, etc. are also very important. They just are not what we focus on at Market Forces. These institutions, however, are crucial for a fossil fuel company's ability to function, and they fundamentally affect their social license. We say for these institutions to be aligned with the Paris Agreement, they must cease financing, investing in, and insuring fossil fuel companies urgently. This is otherwise known as divestment. Now, divestment is a powerful action that has both a symbolic and practical purpose. As a symbolic action, it sends a message to the institutions we interact with every day, be they our banks, universities, governments, or businesses, that you do not consent to the destruction of society by fossil fuels. And as a practical action, divestment removes the pillars of financial support needed by those fossil fuel companies. Now, if you can't divest because your super fund is attached to your type of employment, or for some other reason, maybe there's just one bank in town, then engaging with that institution is key. Write letters and emails, show up at meetings, talk to the leadership, get involved. And there's good financial reasons for divestment as well. Many prominent financiers and economists have been warning us for years that the value of fossil fuel assets could be significantly reduced as the world moves to limit global warming in line with the Paris Agreement. Upon the release of the International Energy Agency's Net Zero by 2050 report, the executive director of the IEA said continued investment in oil and gas could become a junk investment. For banks and investors, this has a serious financial risk that could affect the value of their investments and their ability to provide services for their customers. Whether it's for economic reasons or for moral ones, to date, over 1,500 institutions with a value of $40 trillion have announced their divestment from fossil fuels, including coal, oil, LNG, gas, oil sands, and Arctic drilling. And this list has grown substantially just in 2021. So these are our main campaign areas, pushing global finance and insurance out of fossil fuels. We focus on banks in Australia, Asia, and the UK. We have a superannuation and asset management team, shareholder action, which also is a part of that team as well, insurance. There's the Stop Adani campaign, which has been its own campaign for some time. Fossil fuel subsidies and global coal finance, though I will not be covering the last two particularly, as I don't tend to work across those campaigns. Now, I'm sure you guys are familiar with how banks work. They receive money from customers in the form of deposits and borrow money from other banks. Then they lend that out so that people can buy stuff. The big four banks are huge players in the Australian economy. They control vast sums of money and are incredibly influential in the business world because they control who gets access to a loan and who doesn't, and how much people pay for those loans. To give you some idea of just how influential these banks are, they hold 46 million customer relationships worldwide, but mostly in Australia. And then they have $1.92 trillion in deposits from residents and businesses in Australia. This represents 74% of all deposits from Australian banks. And then they have 2.23 trillion in loans to residents and businesses in Australia, which represents 74% of all loans from Australian banks. So those numbers are the same, which was weird. They're also four of the 6 largest companies on the Australian stock market. Now, all of Australia's major banks have made commitments to the Paris Agreement and to reach net zero emissions by 2050. For the banks, alignment with the Paris Agreement means ruling out finance for any expansion of the fossil fuel industry and phasing out coal, oil, and gas investments in line with 1.5 degrees Celsius. Is this what they're doing? Not really. Not only have they continued to lend billions to the fossil fuel industry overall, 44.4 billion since 2016, and this is actually just to the end of 2020, so it doesn't include 2021 or 2022 data. But a significant portion of this has been lending to companies and projects that expand the scale of the fossil fuel industry. This comes from our Big Four scorecard, an analysis we try to do every year, though we won't be able to do it this year, that looks at the lending practices of the Big Four banks. I mean, the data here speaks for itself. As you can see, the Big Four banks have a lot to answer for when it comes to actually acting on climate change rather than just paying lip service to it. Now, how are they getting away with lending to fossil fuel companies in 2022? What we've seen recently is that the bank's main strategy is through corporate finance, especially for coal. When you are a bank, there's a bunch of different ways you can support a fossil fuel company, lots of different financial products, but the 2 main ways are through project and corporate finance. Corporate finance is where you give a loan to a company for general corporate purposes. The company can use that money for whatever it wants. Project finance is a loan structure where the cash flow for repayment of the loan comes from the project specifically, and that project, including assets, rights, and interest, is the collateral for that loan. So companies prefer it because it limits their liability if the project is unsuccessful. Banks are then proportionally awarded because they make higher returns with project finance. So that's how they incentivize banks to give them that kind of money. They're assuming more risk. Now, at this point in time, the Big Four banks have set dates to end finance for coal, and we have not seen them do project finance for new coal projects, but they are all still willing to lend money to coal companies. And this is still a problem because it frees up capital within the company to then allocate towards its coal mining projects. Does anyone have any questions about that? It's a little bit in the weeds before I move on.
No, it makes sense. Just a loophole where banks can claim to be doing the right thing. However, they're just still lending to the parent company so they can then shift money around to still fund the projects, basically.
Correct. Yes. So they've ruled out one sort of stream of funding, but there's other options still available. So where the banks are at today, we do still think it's a win that the banks have moved on coal, that they are, all of the Big Four banks have committed to reduce their existing project finance exposure to thermal coal mines by 2030. It is a problem that they all still have loopholes for corporate finance, including bonds and bank guarantees. So that's one of the things we're working on from the coal side of things. Oil and gas, we've got a longer way to go. Banks are still very willing to refinance or lend directly to new oil and gas projects, as well as the companies. So there's lots of work to do on the banks. How can you take action? Well, if you or someone you know is with the big four banks and you have made the decision to switch to a bank that aligns more with your values, please take a moment to make sure that that choice to divest is effective. And that means communicating to your bank why you're going to leave, communicating to your new bank why you're joining them, so that if they merge with someone else, they know that it's a risk that they might lose you as a customer. And yeah, make sure you then spread the word. Now, superannuation, a really important part of our lives as retirees, current or future, and an important part of our economy as citizens and consumers. How so? Well, Australian super funds invest around $3 trillion on behalf of their members. They invest in many things, but among them are companies on the Australian Stock Exchange. And in fact, the sheer amount of money in the super industry means that the super funds own about 40% of shares on the Australian Stock Exchange. And therefore, they have an incredible amount of say in how these companies are run. Given how many shares on the Australian Stock Exchange that super funds own, many of them do tend to be heavily invested in fossil fuel companies and are therefore complicit in the operations of these companies. So what do we do at Market Forces to try and change the investment behavior of super funds? First and foremost, we empower super fund members to push their own funds to divest from fossil fuels. Second, we push super funds themselves to engage with or divest from the companies that are actively undermining the Paris climate goals. Given the scale of investment that super funds have in these companies, this has the potential to send a significant market signal to fossil fuel companies and their investors, helping drive institutional change across the investment market itself. Another strategy to get super funds to divest is to run a specific public campaign on them. We've worked closely with fund members, unions, and other concerned groups to launch targeted campaigns on both UniSuper and HESTA. So what advice can I give to if you want to push your super fund to invest more responsibly? Well, we have done a lot of the legwork for you. We have done lots of research on what the funds have disclosed about their investments. From this, we determine what % of each super fund's Australian shareholdings are invested in companies actively undermining the Paris Agreement, as well as what kinds of portfolio emissions reduction targets funds have set, or what kind of fossil fuel exclusion policies they may have in place. This analysis enables you as a super fund member to understand what your fund is invested in, if they have any plans to get out of fossil fuels, and it helps structure conversations with the fund for fund members to voice their concerns. And while some super funds are out there showing climate leadership, there are many who are still laggards when it comes to climate action. So to find out where your super fund sits and start engaging with them, if they are in fact still investing in fossil fuels, you can again head to our website. I'll speak a bit about shareholder action because this is a really important part of our work as well. Our shareholder action campaigner works very closely with the rest of the super fund and asset management campaign team. So what is shareholder action? Well, publicly listed companies are in effect publicly owned by shareholders. Individual people can be shareholders, fund managers can be shareholders, and they are part owners of these companies and get a say in how these companies are run. So one method by which shareholders can influence companies is by signing on to shareholder resolutions. These are motions that are put forward by shareholders that will be considered by a company's board of directors and voted on in the company's annual general meeting, or AGM, that happens once a year. The rules differ around the world, but in Australia, you need 100 unique shareholders to put forward a resolution. At Market Forces, we act on behalf of concerned shareholders to put forward resolutions each year, though these tend to differ across companies and industries. So, for example, we would put a resolution to insurance company QBE's shareholders this year that asks the company to disclose targets to reduce investment and underwriting exposure to oil and gas, consistent with the goals of the Paris Agreement, and outlining concrete plans to achieve those targets. Whereas we are lodging a resolution on Whitehaven Coal, which is a very different looking resolution. This resolution asks the company to do the responsible thing with investors' money and start making plans to wind down its coal production and either redeploy or reinvest capital into a different mining venture or return it to investors. If you have shares as well, and we are always looking for more shareholders to work with. Again, if you head to our website, under Take Action, there's a place where you can sign up and let us know what shares you have. Now, finally, insurance. The last of the three institutions a fossil fuel company needs to operate that I'll cover off today. Now, insurers play a key role in what type of projects can be built and operated. Without insurance, no new fossil fuel projects can be built, and existing projects will have to be phased out. They also play a key role as investors with assets of about 30 trillion US. Of the three institutions, it is arguable that insurers have the most to lose with inaction on climate change, as they are already being hit hard by an increase in claims due to increasing extreme weather events. Many analysts say this is an existential threat to the entire industry. So thus, for the last couple of years, an international alliance of groups, Insure Our Future, has pushed more and more insurers to restrict their coal investment and underwriting. And it is starting to have an effect on the coal industry particularly. And we can credit a bunch of that success to the Stop Adani campaign. It has been really instrumental in making insurance difficult for coal miners. In May of 2021, the Carmichael rail line constructor contractor, BMD, admitted it had searched the world for insurance and had been unable to find essential coverage specifically for its work on Carmichael, which meant that Adani had to take on the risk. Another indication of Adani's insurance problem, the former head of Adani Australia, Lucas Dow, was in the media in the lead up to this year's federal election, asking the Australian taxpayer to prop up a coal miner self-insurance scheme. So we have had probably the most success with our insurance campaigning. We in Australia, our top three insurers, IAG, Suncorp, and QBE, have all set dates for ending coal exposure, and all three will have refused to insure new thermal coal mining projects. IAG and Suncorp have ruled out insurance for new oil and gas too, with some loopholes. Suncorp is the insurer with the most advanced oil and gas policy globally, which was announced in August of last year. So what's next for insurance? We are trying to tighten up those oil and gas loopholes, make sure that the insurance companies' investments are also Paris aligned, and we are advocating for insurers to engage customers about what climate change may mean for their premiums in the future. So that is the end of my presentation. I hope I've given you a few different ways to take action on banks and super funds. if you have any questions, I will do my best to answer them.
Thank you so much, Michelle. It was very interesting. Some of those stats pretty mind-blowing. And of course, in my mind, it makes a lot of sense that there's just so much risk now in fossil fuels, particularly as renewable energy becomes such a big thing and technology is improving so much that, of course, you wouldn't want to be stranded with a worthless asset, right? So that could be interesting. And I guess that's part of the reason why some of those coal mines are closing down maybe earlier than previously.
Yeah, it's very interesting. We're seeing diversified miners like BHP and South 32 making, strategic financial decisions to close coal mines earlier than planned. They can't find buyers for some of them.
Yeah, pretty much.
It's a bit different. It's a bit of a different story for some of the sort of undiversified coal miners out there. They're, they definitely are trying to, keep their heads in the sand a bit, but we're working on it.
Great. There's actually Derek's put a couple of questions in the chat, and I've got a couple more that are written down.
Oh, sure.
So Derek's first question was, he says that we were discussing today how difficult it is to cut through with our messages on the climate crisis, as we tend to look at things in our own lens and couch our arguments accordingly. He asks, what is a good punchy message to get to our constituents to help rethink their investment criteria sooner rather than later?
That's a good question. Look, Climate Council has done a bunch of really good analysis into what messaging works best. They have found that the cost of living is a really powerful message to try to persuade people in the middle. And, the cost of living means not just high energy prices on the day-to-day, but also the risk that, a more climate unsafe world might have for, your insurance premiums, like, if there's further risk from bushfires or flooding, etc.
I guess you kind of feel the impact of, particularly here, of flooding recently with all the grocery prices being the way they are, like that kind of messaging, like, food supply is going to be, cut short if it continues to flood, and obviously bushfires have a massive impact. Yeah.
I mean, I think, something that trying to make it as personal as possible, I think is, the way to make it relevant to get people to take action. And I suppose, like, the second part of that is why is moving your bank and super an effective action to take? Well, money speaks loudly. And to be honest, like, switching your bank account can be a bit of a process, but switching your super fund is really not very hard. I have done it several times myself. So, and it can send a really powerful message to, institutional investors.
Derek, you can just chime in. You're unmuted.
Yeah, I agree with what all you said, Michelle, and thank you for your presentation. I was really more aiming at how you get people to actually do anything. I mean, it's so hard because it'll be too late. I just watched a video today about what's happening with the ice shelves and the Greenland ice shelf, and how it's going to be. It's 4 times worse than we thought it was going to be. How do you convince people to take action today rather than waiting until the crisis is? Anyway, there's probably no easy answer to this, and I won't take up too much of your time, but you just need something to say you should change your investment policies today because, and I can't come up with that because, other than say it's going to be worth nothing for you in 10 years' time if you keep it the way you are.
Totally.
Yeah.
I mean, look, to be honest, like, there are people in my life personally who know the work that I do, and I still, you know, like I can't cut through in my conversations either, you know, but I think, you know, personal relationships are really important. And I think the more that we try to do that and like through connection, the better, you know.
Maybe I'd just like to add, I think that for that slide around the total investment from particularly the big four banks currently into fossil fuels was pretty powerful. You know, we're talking, you know, tens of billions of dollars, you know, in lending loans or whatever to those guys. Maybe that, as you said, money talks, right? Maybe that's a statement that might get people to be like, wow, you know, that is a lot of money. And, you know, even if it's not necessarily changing banks, it could be, you know, at least drive that action of, right, well, these big big corporates can't get away with it forever. So, you know, I'm going to actually make the change. Go look at, you know, say Market Forces website, for example, and see which super funds or which banks are doing, at least trying to do the right thing, you know, and maybe switch my allegiances to them. Yeah, but I agree. It's, yeah, I have the same issue. I deal with that. I mean, we all deal with that day in, right? Every day. Is how can we convince people that, you know, you can't wait? Potentially that graph you showed earlier too, right at the start of the presentation, with as you move along in the years, how much more of a steep curve we have to then, you know, go through to sort of achieve, you know, reasonable targets. Like it's almost at the point now where it has to be like, it looks like at least, if, you know, in the next couple of years, has to be almost an immediate stop of greenhouse gas emissions to achieve 1.5, right? So that's kind of almost a big statement as well. It's if you don't stop today, then we're never going to achieve 1.5. It's not possible.
Yeah,
and
but
then maybe, sorry, yeah.
I just think connection and storytelling, like to be honest, like I've given you a presentation that has, you know, like outlines like why Market Forces exists to do the work that it does as an organization, as a company. But, you know, Derek, in terms of how to, you know, win hearts and minds as it is, like that is very personal work. And I you know, I think something that we've seen over the last few years, you know, especially with like the proliferation of conspiracy theories in the States and whatever, it's just, you know, storytelling and connecting with people is what changes, you know, and finding ways to connect through the personal is what gets people on side.
Right.
I would just comment that I'm just looking at your motto, your money is a force for good. You've got to convince people that what they're doing is for good. And that's what that gets to me. Anyway, enough of my.
Thanks, Derek. Actually, I had a couple of other questions. So you mentioned that a lot of banks have divested, well, I've said they're going to stop funding coal, but not so much gas and oil. Why do you reckon that is? Do you reckon that there's a perception around coal that it's the big bad thing, or is it something else?
The science is very, very clear that coal is like the mining and burning of coal is, you know, of the fossil fuels, like the more significant contributor. I mean, there's also heaps, like all of them are problematic, but I think coal contributes more.
And so the banks recognize that as the biggest contributors and maybe the highest risk, because, you know, with the phasing out of coal power plants and whatnot, they're like, we don't want to touch that stuff anymore.
Yeah,
makes sense. And I saw that you had these super sort of looking at super to identify the, you know, their trends and what they do, whether they, you know, have sort of green tendencies. Do you have something similar like that for banks? Is there a way where can we go to see which bank, for example, is doing good stuff and not necessarily investing in fossil fuels?
Yes, we have a banks comparison table on our website that lists banks' position statements on lending to fossil fuels.
Yep. All right, great.
Yeah.
Derek had another question.
Sure.
He says, does your organization also work in the government lobbying space? We really need a tax on fossil fuel profits to use in a future fund to help offset the inevitable cost of climate change.
So we don't tend to work very much in the government and political space. We have done work in the past around fossil fuel subsidies. We probably will be doing a bit less of that in the future because a lot of other groups that are sort of more familiar with the political and regulatory landscape have taken up that banner, though we still do contribute some of the financial analysis to that. We did basically, there was an inquiry last year. It was like the inquiry into Australian prudential regulation of its export industry or something, which was basically looking at, you know, why are banks and insurers and investors divesting from fossil fuel companies? And we were called specifically to appear at that inquiry, which we did. We made submissions. Sometimes we will still make submissions as well if another group asks for it and thinks that we're well placed to do so. But there are a bunch of other groups that, you know, work, you know, like their sort of area of expertise is the politics and the regulatory side of things, whereas we definitely have our hands full with banks and investors for sure, and insurance companies.
Great. Peter actually had a question as well. He said, have you thought about comparing and promoting the financial benefits of investing in personal and community solar, heat pumps, electric vehicles, etc., a much better return than a bank account? I suppose that's potentially not your area, but have you ever looked at it, comparing that to sort of coal?
Look, we haven't. Again, a lot of other groups work on renewables and the transition and, you know, like basically coming up with the solutions to the problem. We have in the past looked at some of the banks lending to renewables and use that as a comparison to highlight how much more money they're giving to fossil fuel companies than to renewables. But yeah, we like it. Unfortunately, it's not a very glamorous job asking people to stop lending to fossil fuel companies. And so, yeah, we've definitely got our hands full working on that.
Great. Gay actually left another question for me in the chat. She says, Gavin, is Wingecarribee Shire Council investing ethically? Now, I'll have you know, Gay, that we went out to answer that question before the meeting, anticipating that someone would ask that exact question. And we did come across in our investment policy a section that actually says that council's preference is to enter into environmentally and socially responsible investments where possible. So looking at the return on investment and other considerations, that would basically align to the policy, but primarily where equivalent returns are offered. So there isn't any specific numbers mentioned in that policy. However, we think it's a great start, and I think as part of our sustainable procurement work that we plan to do in the next year or so in developing a policy around that, that'll hopefully lend into that as well. Looking at, yes, potentially something might cost a little bit more, but the actual benefit to the environment, you know, and is far greater than, you know, spending a little bit extra money on a better sort of resource. So that's coming. There is no specific ethical investment policy. There is a similar banking policy which has some procurement guidelines around social and environmental and social responsible investments as well. But it is a piece of work that we would like to sort of delve into a little bit over the next 12 months and inform on that where we can. Thank you, guys, for asking that question. It justified all that, particularly Moena. She spent a lot of time talking to a lot of people to get the right answers. So really appreciate you, Mo. is there any more questions? This has been really, really interesting to me. Thank you so much, Michelle, for your time. I've recorded this so I can share that with everyone who signed up, and we'll be able to share the slide decks with everyone who attended as well. And if you guys want to further promote that amongst your Win0 members as well, that would be much appreciated. But yeah, it's about getting that story right and making sure that we convince people that it is definitely the right thing to do, and it can be quite easy and often in your favor.
For sure, yeah. I have. When I first moved to Australia, somebody told me to join up with CommBank because that's what the bank they'd been with because of dollar mites, I believe.
Honestly, I'm a dollar mite kid, honestly.
Yeah. I think a lot of people, I'm guessing we're in a similar generation are. And then when I, basically realized that the world was not moving in the direction that I thought it would be moving in about 5 or 6 years ago, I realized I needed to switch my bank and switched to a bank based on Market Forces Bank's comparison table. So that's how I came to Market Forces' work as well.
Great, thank you. Any other questions or final comments before we finish up for today? Public holiday tomorrow.
Only my admiration at your persistence, and pushing boulders uphill is never easy.
Hey, the feeling is mutual, Derek. I appreciate the work that you do as well. So thank you all for being here.
Okay.
All right, thank you so much, everyone. Have a great night and a wonderful public holiday tomorrow.
Thank you for organising with Gavin too, by the way.
No worries. Thanks for coming along tonight. All right, everybody. Talk to you later. Bye.